To properly complete an ARM in Mortgage Dashboard, you'll need to go to the Loan Program section of the application. You'll select the amortization type as ARM, and that'll bring up the ARM detail screen. Under the ARM detail screen, you'll need to enter the index, the margin, the floor rate, the first adjustment cap, the periodic rate cap, and the maximum adjusted cap, as well as the life cap will auto-populate. So in this example, we've got the index as a margin. The index is 0.68. It's a conventional loan. The margin is going to be 2.25 in most cases. When you're in the pricing engine, you'll actually have the option to select a different margin if there's a better price available for a lower margin. In almost every case, a 2.25 margin is the best scenario out there. The floor rate is always going to be equal to your margin. The first adjustment cap, that varies depending on the program. So in this example, we've got 115. That would be a government ARM structure. On most of your conventional ARMs, you're going to be looking at either a 225 or a 525 cap structure. So if you need to make that change, you can just update that in this section. And now you're ready to go. The first rate change, if we're doing a 5-year ARM, is going to reflect 5 years. If you're doing a different type of ARM, you'll change that there. Next rate change, all of our ARMs are going to be based on the 1 year, either 1 year LIBOR or the 1 year T-bill if you're doing a government ARM. The effective date, that's always going to be your lock date. That doesn't really affect anything as far as your disclosures go. So I believe that field is going to auto-populate every time that you come in here based on today's date. When you enter the lock information, that effective date should reflect your lock date. Completing the ARM information in Mortgage Dashboard is important because that information goes directly onto your GFE. Incorrect information on the ARM section will cause a disclosure violation with your GFE, possibly causing an issue with compliance. So in this example, you can see we've entered the caps of 225. And here's the ARM section of the GFE. Can your interest rate rise? The box is checked yes. You need to make sure that if you're doing an ARM, that box does say yes. And you can see it's added 5% to the interest rate. So this is a 5.5% interest rate. The max it can ever rise is 5%, so a 10.5 note rate. And you can see it's saying the monthly payment at 5.5 is $56.78. We've got a low loan amount here, so it's a bad example. But then the next section that's important on an ARM is even if you make your payments on time, can your monthly amount owed for principal, interest, and any mortgage insurance rise? That box does have to say yes. You can see the fields have already populated. It knows that we did a 5-year ARM based on the ARM information we've entered, and it knows that the max it can ever rise, the monthly amount owed can rise to $68.33. And the maximum it can ever rise is at $86.67 total payment. Once you've completed your ARM information and you've double-checked your GFE, you're now ready to issue disclosures. There is an ARM-related section in Mortgage Dashboard that has your ARM disclosures. So if you were doing a 5-year ARM conventional, you can see here's the ARM disclosure disclosing the 225 caps for a conforming 5-1 ARM. The non-conforming disclosures are in here as well as your government disclosure for a 5-1 ARM. Keep in mind the caps are different by program. So for example, if you're doing a conforming 7-1 ARM, your caps are 525, but if you're doing a non-conforming 7-1 ARM, your caps are 225. So very important to check your caps. I can't stress that enough.